afternoon, traders. It's Bill Baruch with Blue Line Futures, and it's your daily midday market minute. We got a rally on our hands, but before I get to it, if you're watching this on YouTube, please click the link below and subscribe. Like and subscribe. And if you're watching from our website, there's also a link below to direct you to YouTube, and you can subscribe that way. We'd love for you to follow us. We'd love for you to help us build our following. Yeah, we got a rally on our hands here. The stock market is trying to go gangbusters. We got a lot of names across tech, but you know what? We're also seeing those niche specialty industrial companies making a move, and I've been talking about those quite a bit. Maybe not here on the midday market minute, but it's something we write about. It's something we talk about, some of the cyclicals that have had shown some strength, pointed to in the Morning Express. And I like to see that because that means there's leadership elsewhere and not just tech. And that's important for a rally to really be sustainable. You also got the small caps that are showing up here today after having a tough session or two. I mean, really, the broader market just had a tough session or two. And we've seen a lot of these indices really across the board come down and retest the 21-day moving average. We've seen a lot of support being built in the S&P specifically, right around that 43.80 to 43.85 area. Highlighted that in the Morning Express. But, you know, as well, it's the seasonality here. Today kicks it off. Been talking about that in the Morning Express, too. You buy the S&P on June 27th, and you hold it through July 23rd. It's been up 15 out of the last 15 years and averaging 75 points. You know, on top of that, I think the cherry on top is we all know portfolio managers and you know, people managing money in the equity markets. They've been under-positioned overall. And, you know, you got these end of the month, end of the quarter. We have some window dressing coming. I think this is the start of some window dressing. Now, we have some resistance levels we do need to get out above, and that aligns for the S&P most crucially with that Thursday settlement from yet last week, the 44.25, 44.30 area. We need to just clear that and get out above there. Now, the NASDAQ is not even at that level yet. It's at just yesterday's early opening bell high, 15,150 to 180. There's some good resistance there. Really, if this is going to be something that's going to just kind of melt back up to the swing highs we've seen, we got to get above 15,250. So those are some of the levels that you really need to know. Now I have a lot highlighted on the Morning Express, and a big week still to come. A lot of data this morning. It actually was better than expectations. Durable goods, building permits, housing. Prices were down less than forecast, and then consumer confidence was a blowout number. The market's really feeding off this, even though yields are higher. And I think that tells you here where the animal spirits are moving, and that is telling us that you got the window dressing, you got the seasonality, a lot here, and a lot of support being built from here. So I'm very upbeat, and we've been cautiously bullish. Remember, we went neutral at the start of last week on Monday. Last Monday, been neutral all the way through yesterday, and or turned cautiously bullish again yesterday. And I think if we get above 44.30 today on a closing basis, I think there's reason to be more bullish after that. So moving on, though, commodities, they're just not hanging in. I mean, it's not the dollar, at least not the U.S. dollar, and it's not the Chinese yuan, but the Japanese yen it's just been bludgeoned. That's obviously, I think, hurting some of the precious metals. But you look at crude oil, look at copper, and I think there was a bit more to be excited about today, and they're just not showing up in the market. You got crude oil down sharply, and it's moving. It's tried to rally out above 68 and couldn't really. Now we're kind of hovering around that and dipping its nose below there. There's a lot of support in that level I'm seeing as we move into inventory data tomorrow. Got API private survey after the bell today. But last night I thought it was important, though, that the People's Bank of China, they actually strengthened the yuan, and this is after a streak of basically devaluation for the last 2 months. And so this is a turn here. If this turns, this is a bullish, very bullish tailwind for commodity prices, and with crude oil, with that coupled with Saudi Arabia pulling another 1 million barrels per day of production off beginning in July, I think there's a lot of things to be excited about here. And so maybe it's just, you know, at the end of the month, and there's been some patterns, you know, where ever since ESG has been extremely popular, we've been seeing energy getting sold at the end of the month and being bought at the beginning of the month. So it doesn't really show up so much in statements. So think about that. I wonder if we'll see a nice start to the month in the quarter next week, and crude oil. But stand by for that the energy, the EIA inventory reports tomorrow, and I think that we're due for a bullish one, kind of even out some of the bearishness we've been seeing in those reports. And then, like I mentioned, the Chinese yuan, the CME's CNH product, it is the USD CNH. So as that strengthens, it's the US dollar strengthening. As that weakens, it's the Chinese yuan strengthening. Where that is down today, about 2 points. And I think that could be the start of something if we see continued yuan strengthening from the People's Bank of China in the overnight. So keep an eye on that. But what we're seeing here is yields rising on the strong data. The dollar really, the dollar's not doing much. I mean, it's stronger against the yen, but the euro is higher on the session. And, I think that right there is something that, you have a lot of hawkishness coming out of the ECB right now, maybe holding gold back. But as well, we've seen this, and this is something I remember in the thick of it last year with gold and silver selling off into the end of June, into the 4th of July holiday, into the end of month. So maybe that's something that we're seeing here again right now. A lot of weakness here in gold. Silver's had a good little 2-day run. It's actually holding positive on the day. But there's the 382 retracement, big level of resistance up there, and the new September contract 2330, and it basically went right there to a T before peeling back. It's trying to hold some ground though. So I think the next couple of days are going to be interesting. A lot of data coming out of Europe for inflation, starting with some of the separate countries, and then later in the week you have the Eurozone number. But tomorrow we have start with that CPI. Powell is on the schedule tomorrow, and then as the week unfolds, we get GDP data. We got the Fed's preferred inflation indicator with the core PCE index. A lot of data to come out here to finish out the week, and our team is here to help. So don't hesitate to reach out 312-278-0500. Remember, futures trading involves substantial risk of loss. It's not suitable for all investors.